Okay, good evening, everyone. I have about 10 minutes, so I should see if I can use it to do something for you guys. Trust me, I have been seriously busy for about 1 month plus now. It's something that you guys will hear about later on. But let me use this 10 minutes to tell you that the market has been very, very sweet, especially good. And I told you I love what gold has been doing since January, and it has been very, 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 very sweet. I guess I can be on any time frame, and I'm saying everything because I have a game plan. You don't have a plan, you just, you tend to fail in anything you do. I get in especially in your trading. You have to have a strategy, you have to have a plan, see what the market is doing before you take the market. So I just want to use maybe 5 to 10 minutes to show you what I can see in the market. And I don't need to, talk too much. You can go to my page, Vision X Limited, Vision X Limited on YouTube. You see videos how we are able to trade this market to 1,880. I told you, if you follow my Telegram channel very well, you see where I've been analyzing gold. I guess in it, how gold is coming to 1,880 emergency video. I even did this emergency video 2 weeks ago that since gold is losing 1,944, that gold is going down to 1,880, and we just got there 650 pips. Kudos to everybody that took that short trade with me. And I'm here again after 2 weeks. I did that video. I took this trade on August 8th. Gold sell 220 pips from 1,932 to 1,910. Kudos if you took that trade. So let me just go to gold. It's very simple. What gold is doing is very simple. We got to target, and it was actually a daily structure. It was actually a daily structure. Let me show you. It was actually a daily structure. Just watch. I told you that if 1944 does not hold, so if I maybe just drive quickly. So what I was expecting actually was, a reversal from this area from, to give us a complete market, a complete, what's it called? Um, I'm coming. A complete head and shoulders pattern continuation to the upside. But immediately we failed to hold 1944. We came down to what's it called? And that was where I knew that okay, gold is switching from the head and shoulders pattern towards an ABC move to the downside. So if you look at it very well from the flip side, this was a break of structure to the upside. This was a change of character to the downside. Are you getting me? So if I should drive this market, professionally, break of structure to the upside. Sorry, this was a break of structure to the upside, and this was the last higher low we had. I get in which is not supposed to break, and immediately it broke. We had a change of character to the downside. I get in. So since then, we're on this. I'm just gonna be very fast. Sorry, because I have less than 10 minutes. I have to, leave this computer and go and do something. And immediately we change character to the downside. Hold on, where are you? Lately, we change character to the downside, breaking structure, breaking this higher low. We're again on this market going to the upside, and lately we broke. Immediately we broke this structure to the downside. We changed character to the downside, and we had a change of character here. I guess, and so for that to even happen at all, what next? We started acting. We started using this particular area as what's it called, resistance, and for that to be a resistance, what next? I'm just trying to tell you that gold is still massively bearish, and gold is going to get to $1,817. So if you are taking a shot from here, you're about gaining about 1,000 pips from here. So that's why I'm doing this particular thing for you. So we change your character to the downside. We'll find a retracement at 0.5 Fibonacci retracement level of this whole movement to the downside. Are you getting it? So we are supposed to retrace, and the only way the market was supposed to continue to the upside is forming what? A head and shoulders pattern to the upside, which failed around this area. And how did I know? That was when I did that emergency video. I guess I'm going to look for the emergency video. I said if gold fails that structure, that means it's going to form a new structure. And what's the new structure is going to form? An ABC move to the downside. So if I should take all these things off and just show you what I mean by that, I get an ABC move to the downside. I should go to the daily. As you can see, we did an ABC move to the downside. And how was I able to get 1,880's reserve? What's it called? Take profit is by bringing your Fibonacci trend extension, put one here, put the other one here, go to 0.5, and as you can see, we got to target. So we even took our profits. If you go and check my Telegram channel, we took our profit at 1880, 1889, 1890, $1,890. That was where we took our profit. We didn't get to 1880 because we will know that we're just few pips away from 1880. And if you look at it, we didn't touch the so it's important that if you have about 500 pips and you're in 400 pips already, and you know that we might not be able to touch that particular distance, just take profit. We took profit. And why did we take profit? That was because we've gotten to the profit level, and we were seeing what a lot of sluggish movement and consolidations to the downside, and even breaking a major. That's where trend line can come in right now. You can see that we have this trend line from the downside, and if you check very well, you see that we broke from it. So yesterday I saw that we are in this consolidation phase, and we've gotten to 0.618 retracement level already. That was why we were seeing this consolidation. So I was like, okay, if this is be the case, let me drive price action. I'm very, very good with price action. And whenever I'm saying gold does not fail, gold will not fail. You trust me, gold has been very, very sweet. If you follow this, you've seen this break out of this. What's it called? You see this, we tried to break it, we didn't break, we broke it, then we came here and we changed character to the upside. So here became my demand zones. I guess if truly that was a change of character to the upside, here is now what demand. So I think I'm taking time. So that was a demand. But there's a reason I'm doing this video, because we're about selling massively, maybe starting from tomorrow. I'll show you why and how this market has happened somewhere before. And it's just structures, just follow structures. Trust me, just follow structures. This market will never fail you. The market has not gotten to target here. Are you getting it? We've not gotten to target yet, but we are retracing. Why we're retracing? Because I'll show you. This was a minor retracement, and this, even though the minor retracement is from 1890, where we took profit from, we took conducted from there again to 1915, 250 pips. But that's not why I am doing this video. The reason I'm doing this video is about to come to life right now. So we'll go back to the daily time frame. And where are we on the daily time frame? We've gotten to, we actually broke structure to the downside. This under break of structure, confirming, are you getting it? Confirming a break of structure to the downside. So if this is a break of structure to the downside, we are supposed to do what? Sorry. Hold on. If there's a break of structure to the downside, we are supposed to do what? Retrace to the upside. So after every break of structure, don't sell again. Let me give you this example right now. I'm saying this and I'm doing this video because I was discussing something with someone right now. Why don't I sell when I've gotten to downside, even though it's a scalp? I don't sell anymore because I know we've broken structure. So even though it's going to continue going downward, all I'll be looking for, I guess, is a little bit buy, even though it's a counter trend. I know we've broken structure to the downside, but have we gotten to target? The target is 0.786. Have we gotten to target? No, but the reason why we are retracing back to the downside is because we broke structure already. So the market tends to, first of all, now let me give you the reason why we take profit from 0.618 first, or all our take profit. We don't get to why we don't get to 0.786 first. It is because whenever the market gets to this particular 0.618, take this one to the, whenever the market gets to 0.618, it tends to bounce first for some time or some day, depending on the time frame. It tends to bounce first before to continue to 0.786. Now, how are you going to get to 0.786 is what I'll show you right now. The market has broken structure already, so it tends to bounce first before continuing the price movement to the downside. And this became an inducement like we had on the lower time frame. You see, so let me just, okay, the reason why we're bouncing is because we broke structure already and we're supposed to bounce to the downside. But overall, what are you saying? Somebody is saying that, oh, this market has recovered and will continue going on. Not good. You don't know gold's behavior. If you know gold's behavior, you will know that gold market structure does not just do like this, because look at, this is the daily time frame right now. Let me take, should I go to another market? Let me see if I can get on that market. Okay, see the ABC move I did. This was the structure I did, and we are coming down here. As you can see that it's playing out, meaning that we're coming back to this 128 area before we can start flushing down. But that's not the point I'm trying to give you. I'm trying to look for another market. Can I get to another market? No, okay. Let me just continue this. Take all these guys off. Oh, let me just take everything off. Yes, let me take everything off first. Trust me. Look at this. Look at the structure. What are you saying? This market came down. We've changed character to the downside already. We came back to an area of resistance, previous resistance. We didn't break it. So why do you think that we should continue going back up like this? I don't see my structures like that. That's how I trade. I don't know about you, but this is how I trade. What I'm trying to tell you right now is that there is nothing pivotal about whatever you are saying here about gold recovering and coming back to 1980. This is a break of structure I can see. To me, I'll consider this a break of structure. Are you getting it? A break is a break. I consider that a break of structure. So meaning that we are trading in between this range right now. I guess it means that we are trading in between this market right now because we did an impulse, we did a retracement, then we did an impulse, but this impulse has not completed yet. Trust me, this impulse has not completed yet. We are still it's not completed yet because the market is supposed to get to 0.786 because we retraced from 0.5. Are you getting it? The market is supposed to continue to $150, $253 area or $160 area. And I consider this a retracement. And two things I'll be looking out for on this retracement because of this break of structure. Remember, the market usually takes profit from 0.61. It retraces a little before continuing to the downside. Now, you might ask me that, okay, where is my next sell target? Let me zoom out. My next sell target will be bringing my Fibonacci retracement tools in. And why I'll be selling is because we did not break structure to the upside. This is a major resistance. We sold major resistance, resistance. The third one, remember what I usually tell you, my break structure to the downside, then come up. So where I'll be selling from is when I'm looking for maybe a 15 minutes or 30 minutes or 1 hour price action, like what happened on the 1 hourly on the downside here and what happened on the 1 hourly down. The market will only tell you whatever it wants to do after breaking structure. After that break of structure, what did you see? The market reversed. And what were you saying? Even without bringing your, your trend lines in, the market was trending perfectly well. Are you getting it? Lower high, lower low, lower high, lower low. Are you getting it? We had all these structures from on the 1 hourly chart. If you are taking your 100 pips, 200 pips trade, are you getting scalping or day trading it out? Immediately we had this break of structure to the downside. We are at 1880 area already. Are you getting the 180 is just here. The market did not get to target. You are supposed to be looking at your lower time frame and be saying that, okay, what is happening here? Let me continue as in the market does three things, either trend to the upside or trend to the downside. Are you getting it? Or in a range. And this market was broke the structure, but after breaking the structure, what happens now? We're supposed to come back and break the structure again. But instead, what did you see? The market got exhausted with a double bottom. The market came back up again and started doing a little bit break of structure, or probably you can call it a change of character to the upside, and immediately came back and give you a triple bottom. So why were you still selling? That should give you a sense that this market has done what? Switch to the upside. And how do you confirm a switch? Are you getting it? Meaning that this market was still inside this triple bottom range. So someone was asking me that why did I give a bullish sign yesterday? That is because the last lower high we had was this one. So for the market to break this to the upside, this means that the market has done what? Change character to the upside. So I would take this as my demand zone, this whole last candle as my demand zone, that if the market comes into this demand, I guess in it, and finds that demand, I'm seeing that push or giving me a morning star, which it did, anything at all, even though it's not a morning star. I just want to see volume come in. Assuming my volume profile is here, you see this volume come in largely here. Are you getting it? Confirmation that the demand has taken. So I took my sniper entry at 1890, $1,890, and left that market to run because we have changed character to the upside already, and we'll continue doing what breaking structure to the upside. So where are we traveling to if I should leave this price action perspective and the way I drive my market? I guess where are we driving to? You should know that you now then go to your higher time frame or your daily time frame where the market has been forming. And on my daily time frame right now, I tell you that we are traveling, that we reversed around here in my 1 hour time frame, and we are traveling to this 0.382 or $0.5 area. But this is a massive what um, daily candle we have today from 1897 to all the way to 1920. That's about 230 pips to the upside only today, just because of this change of character. We did what we had on the downside here. So we are traveling. Remember, the market does what? The market will always travel to an area of value or the Fibonacci retracement levels of 0.382 first of all, or 0.5 before finding retracement. So I'm waiting for a sell in these areas before selling. So I'm waiting for 1935 or 1923. And why I'm not selling from 1923 is because it's there. It's showing you. Look at, it's showing you something. If we should look for supply and demand, what are you saying? From here to here is our next supply, because if you go to the 4-hourly chart, you will see that that place was what? Where the market did what? Actually switch to the downside and form. It uses your sharp patterns to roll. If I should take all these things off, let's see where the market actually misbehaved from switch to the downside. And when I started this video, it was here. We actually did what? A head and shoulders pattern. We did what? A head and shoulders pattern. This was what switched the market to the downside on the, what's it called? From where we took our trade from. Broke to the downside, retested, and this was the area that actually did what? Broke, made the structure to break, because we switched to the downside, we tested. So this whole area becomes what? Supply. So it depends on how you are using your market. That's why I told you that I love the 4-hourly time frame, because it helps me to drive what the market well. So if this market has actually retraced now, hold on, let me do something now. Remember, the market switched with what? A chart pattern. Now, what did it do again here? It switched with a chart pattern again. You can call it a triple bottom on the 1-hour time frame, or you can call it a double bottom on the 4-hourly time frame. Broke to the upside, retested, and continued going. So when you have these two things now, you put, and as in, you now know that this is your upside and this is your downside. So the market did a switch here, also did a switch here. So all you just have to do is that, what is the trend of the market? Bring your Fibonacci tools in. The market now has retraced to the upside, to the downside from 1918, and has retraced to the from the downside from 1880. So from here right now, you just need to determine where the market might be coming to, knowing that the market will not get above $1950 area, or you understand, the market is not supposed to break back into this was where it switched to the downside with the head and shoulders pattern retested. So the highest thing it can do is coming back to these previous what's it called? This was previous support, now turn resistance. The highest it can do is coming back to this previous resistance before selling down again. But will it get there with anybody knowing that this market is still bearish from the upside? With anybody who wants to take his or her money and start buying this market up to $1950 area? It can do whatever it wants to do, but trust me, the market itself will not fail you if you are following this market correctly. I told myself 10 minutes, but you can see me talking above 10 minutes because I just want to give you how this market actually does work. And I'm telling you that we're still going down. Why? because this structure on the daily itself, even though it's a recovery of a structure that we are seeing right now, continue recovering to the upside, the entire market, what is it telling you? The entire market is telling you that I am coming back. If the highest I can come back to before I can be bullish again, before some people will buy again, is if this broken head and shoulders pattern recovers. I want to buy from this area again, recover it and buy from this area, unless I'm not buying, unless we break above. Are you getting a retest and reclaim this previous area of value? Are you getting it? Before I start buying again. Until then, I'm selling. So I can decide to say, okay, let me enter lower lot size at 0.382. Probably if I'm using one lot, I can enter 0.2 or 0.3 from here, enter another, take another entry from 0.5, 136, take one entry from 124, take one entry from 136, and probably my stop loss will be from 124, 120, let me say 124 to 150, 150 or 160. That's about 300 pips, because I know that any of these two areas will do what? Continue the sell to the downside to complete, continue going down. And why am I doing this video is because the structure is even somewhere already. That is because you don't find time to watch the market or dissect whatever is happening. Are you getting it? You don't dissect the way I dissect, the way I look at the market like this. You look at all your areas, broken structures, look at your chart patterns, what the market uses in moving. The market uses all this price action in moving. It does not fail. I guess, and these are the footprints, these are the sign. This market are like sign languages where you see the depth talking to themselves with hand, and this one, they can understand themselves. This is how they believe that we professionals should understand ourselves, that if the market switched, it has switched. If it breaks a particular sharp pattern or a price action pattern and we test it, will continue downside because it breaks structure. And that was where I saw that I told you guys that let's take a sell from $1944 area, sniper entry on $1932 area, and take it down, because we know we'll break structure, then return back to the upside again, and continue going down. Now, let me pause here. Let me pause here and show you something very interesting, because if you are confused, like, how do I know that we will sell from this whole area? So the highest place we can come back to right now is 1940 to $1944 area, where I told you guys that where we got the emergency video. If you remember the emergency video, I told you guys that this is an emergency. The market must not do what? Break below. I get it. So I gave all those trades. This is an emergency video, very, very important. Go and watch that video 2 weeks ago. Yes, so if you watch this video, you see where I talked about the market dipping to, look at it. I guess it's where I told you that 1,900 I will not. This video is, oh, it's from 2 weeks ago. Just go and watch that video. So let's go back to gold right now, and why I feel like this market will just maybe retrace to 0.38 to 0.5 and sell down and continue to the downside. Are you getting me? Because we're breaking structures already. We're breaking structure. This is a confirmed breaking structure. The market does not have that power, that pivotal power to come back and break this particular area of value. Now, let me not talk too much. Let me show you what I want to show you. And what I want to show you is this particular structure on NASDAQ. NASDAQ. So I'll just do NASDAQ and then gold and leave USD. USD structure is sweet, as you can see. Sweet, we've been talking about it ever since. You can see we've been talking about this ascending triangle, and we are here right now. So we're bouncing. We might bounce back to this area or back to this area before selling down, or recover it and continue going up. But we're talking about gold today. Are you getting it? So you don't get carried away when you're trading. And your areas of value, I've told you before, your areas of value are very important. If it will take you to wait till your areas sell from your areas of value or from your areas of value, knowing that we'll switch to the downside with broken structure. So this is the area of value you want to sell from, or you want to sell from a Fibonacci areas of value. Good. Or the market puts your risk to it. If you're supposed to, probably this is a 300 pips reward if you are trading from 1,924 area, selling from there, knowing that you have a 350 pips. So if you're using a one lot before and your 350 pips is too much on your account, which is $3,000 stop loss, you can reduce your risk down to probably and the highest risk you can take on that account maybe is $1,000. Divide that $3,000, your one lot into 3, that's 0.3, 0.35 or something like that. You can use that, and you now lose only like maybe $1,000 instead of losing $3,000 on the one lot 300 pips account. That's how to manage your risk. Are you getting it? But overall, what is this market saying? This market still wants to go down. Are you getting it? Look at it from the daily time frame. We've broken structure to the downside. It's just to retrace a little 0.3 or 0.5, then start going down. Are you getting? And that's what I know gold to do. And the gold and NASDAQ are a little bit similar. Look at it. Let me show you now. Look at the structure. What happened here? This market had a break of structure to the upside. What's happening? Maybe I need to refresh. Wow. I will say 10 minutes, so I will go and do 15 minutes or 30 minutes on one video. What is important is for you guys. It's for you guys, so you appreciate by sharing all these videos to people that truly needs it. So where are we? We are here, and I'll show you why I sold from 15,200 to 15,800, and I'm buying back. See what NASDAQ is doing. See what NASDAQ is doing. These things are on my Telegram channel. These are about 500 pips to the downside, 500 pips to the upside again, happening now. Forming the head, but that's not the main reason why here. Look at the structure. Look at the structure. This was a break of structure to the upside, right? This is a break of structure. And this was the last low we had. We must not break this structure. The moment we are breaking it, what happens? We do what? When we are breaking it, what happens? We change character to the downside. And this was the first. So let me go to the valley right now. Show you something. What happened? What happened after changing character to the downside? We did what? Watch this video. Very important. Look at gold. Are you seeing it? Valley. Coming. We came back up here after breaking structure, we came back second time, third time, we couldn't break. What happens? We came back the first time. I'm not saying this is just dubious speculation, but this is what I know about market structure. When we came the third time, what happened? We broke structure to the downside. Look at it. When we came the third time, what happened? We broke structure to the downside. So what can you see here now? Now let's measure with our Fibonacci tools. Are you getting it? Let's measure with Fibonacci tools trend extension from here to here, right? To here. Where did the market bounce? 0.618. The market will always bounce from 0.618 to the upside. Are you getting it? Before doing what? Continue to the downside. The market will always bounce. So I think that's the bounce. I know, not I think, that's the bounce we are having right now. So the market is even giving us another discount to enter into the market again. Are you getting? So take your profit. Always take profit for 0.618. Are you getting? Let me do that now. Let's so you can see. Always take profit from where? 0.618 and wait for a discount, because the market will always break a structure. After every break of structure, the market will always bounce. So I'm expecting the market to retrace to 0.618, 0.382. Are you getting it? Or 0.5 before continuing down. But I'm favorably going to enter a trade from here, 0.382. Because if you bring our Fibonacci tools in right now, again, this was the bounce we got. So I'm probably entering from these areas after even inside the Asian session, I'll start looking for 5 minutes, 15 minutes, change of character to the downside and continue selling, because the market will show you when the market wants to reverse, it does not just reverse like that, even though it's a fundamental day. It will make use of all these what's it called? Price action chart patterns. It will make use of all these price action chart patterns. Must make use of it. The market does not just lie. You can see that the market has been working with price action chart patterns. Are you getting it? The market works with those things. If you trade those price action patterns, you will likely double top. Are you getting it? Break of structure. Are you getting it? That's retest again. Are you getting it? The market does what? Price action part chart patterns to move. This was a descent triangle, which is a bearish continuation pattern. It used a head and shoulders pattern again to move, and did a head and shoulders pattern again to move and move again. Did another triple bottom to move again. Now, you to do something like this on the lower time frame again to know what to continue to the downside, probably 5 or 15 minutes time frame. Stay on those 5 minutes, 15 minutes time frame. You can start selling from this area, and you'll see what will start breaking structure again to the downside until we get to our 0.5786 target before we will now start recovering, doing our W pattern, probably to continue to the upside. So the market never fails. So I'm just trying to use NASDAQ to show you this particular growth structure. It has happened somewhere before. You're the one that is not seeing it. This is what I'm expecting. When we go to 0.38 to what happened? We sold to 0.786. We didn't even look at it's clear now. Very, very, very sweet and clear. Very, very, very sweet and clear. So what happened in this area after bouncing of that 0.786? A lot of people would have taken a trade from here thinking we're going back. No, what the market did was, come back here to this resistance. Did it break it to strange character to the upside? No, it did not break it. It came down. Did it break it? No, it did not break it. Broke structure and continued to the downside before it switched character, taking this liquidity and consolidated and switched to the downside again. So what's your higher time frame structures? Well, before making decisions, and don't just because, oh, we have bounced, this market is going back. Wait for a change of character. And the only change of character we have on gold right now, are you getting it? Is coming back and recovering this particular area of value. Remember, this was a head and shoulders pattern, break and retest, then broke structure. So for this structure to be valid, I'm not buying. If I've taken this trade, I've taken right now, I guess, and if I even want to buy again, I will wait, even though it's going to take me 2 weeks for us to recover back this previous emergency video I was giving you here. I guess and recover it back. I guess and then the market will not start buying again. That's what you're supposed to do. Take your trade from here, take profit. You have 200, 300 pips, take profit because you've already sold from here to here. You've taken more than 600 pips, taking 250 pips again, all the way from August 1st, and this is August 21st, 20 days ago, 600 pips to the downside. You have another 100 pips, 900 pips. How many people can catch 1,000 pips in a month? Some people are looking for just 20 pips in a day. Are you getting it? A lot of people don't even get up to 20, even more than 200 pips in a month. They are okay. Put a lot of cash to it. Are you getting it? I know that might blow your account, but if you're moving like this, why can't you use 1, 2, 3, 5, 10 lots? That's when, because you are using emotions, you don't know how this market are actually doing or moving. Are you getting? That is not good. You are supposed to study each market you're trading before taking that market. Do you know that I'm even selling right now on what's it called? I'm not supposed to sell, but because I am on the lower time frame and I'm seeing things happening, that is why I'm even selling. Because right now, if even on the 3 minutes time frame, I know that this market has broken structure to the upside, and definitely we might come to 195's area before even bouncing back. So I might take, maybe I took probably $19, $20 to 19, 15, 50 pips on this trade. It's stupid, but sometimes it's just good that you know what you're doing, you know how this market does move. Are you getting this? This is just how, even though you want to scalp, know what you are, know your direction first. Then you can now start doing what? Scalping those markets out. Are you getting to knowing that we are getting to this area already, and where did the market switch from? Look at these areas the market actually did what? Switch from again. on the lower time frame. So if you go to the 1 minute time frame, this was when we took that 1,932 932 trade. After even breaking structure to the downside, we still got this particular market, which the market has been bouncing from since that time before we broke it again. Look at from here, look at the market has been very sweet. So how can you tell me that you have not been seeing all this sell? Are you getting it? These are sell. 100, all your pips are here. Look at the breaking structure, continue breaking structure, because the market actually broke that head and shoulders pattern. We tested, and since then we did what? We did another descending channel, broke to the downside again, retested, came back, retests, and down. So if you've taken all these entries, if you're taking this entry, you took this entry, and you took this entry, you know that definitely we are coming down to do what? Break a structure. And once we break that structure, what would then happen? We'll reverse back to the upside, back to where all these our areas are. Look at these are areas where we might likely, reverse back to $1932 area or $1940 area. I guess. So your areas of value matters a lot. So if you are losing money in this market, largely that's because your stop loss is too tight, or because why are you blowing account? Because you don't know whatever is happening in this market, knowing that these were previous areas, they were very significant ones that the market might actually do what? Travel to before, So if we should even go to probably, let me use a higher time frame to see where this market might definitely I want to sell from. Bring your Fibonacci tools in. You see it, it's there in between these areas. Are you getting? It's there for you. Are you getting? So it's just there. To me, I think the market is just there. You're the one that has not been, following up this market ever since. The market has been there for you. Go to the 4-hourly time frame. You see I told you. See on the 4-hourly, on the daily. You see I told you that, okay, if this market was even supposed to travel back to the upside, this is where the supply actually did what happened. This is where the supply happens. So we'll come back to this supply. I don't care about these candles. I don't look at candles. I look at structure. I don't care about what this candle is doing. The next day candle might be like that, but these areas are supply zone because this was the supply zone that broke the structure. So it's a break of structure. If it was supposed to be a break, it was not a break of structure. Why did the money come and even get lower than 1,900? Are you getting it? 1,000 something like that. We broke a structure. So this is a supply. This is a major supply zone I'm looking out for right now. So I'll just take this off and just label this particular part what? Supply, my supply zone. So from here to here, I take my last green candle since it's a downtrend and just name this particular area what? My supply zone. I guess it's my supply zone. So I probably use supply and demand, my most important area of value to know, trade my market and put my stop loss above it, put face to the market, put my stop loss above it, and just, try to take this market to the downside. Because if this is my supply zone, when the market comes into that supply zone, what happens? Are you getting it? If you find supply, you will see it using a sharp pattern on the lower time frame, probably 1 hour, 15 minutes, depends on the volatility in the market that particular day, and just, probably do a head and shoulders pattern or a double top break structure, we test again. Are you getting a recover? And you take your conservative entry or your aggressive entry when you are seeing those things happening on probably your 1 hour time frame to continue doing what? Breaking structure to the downside. Are you getting it? So this is my game plan for these what's it called, the next coming days or weeks. Are you getting this? Is my game plan the next coming days or weeks to do what? Drive this market to the downside. So as it stands, gold is still bearish to me. Gold is still bearish to me. And the only demand, remember, if you watch those videos, my previous videos at the back, remember, my only demand I can see is this particular demand order block area. ISNs. We might be traveling back into this demand zone of 1,000 something dollar area. So for me to know where we are traveling to, I will just bring in my last result, my Fibonacci trend extension in from here to here to here. You see where we are traveling to. We're actually traveling to back into this 0.786 area or 1 area, 1,850 dollar area. We might travel back into this, and then bounce again, travel back into it, find demand. Then we can now start thinking of coming to break these major areas, because investors, position traders will want to buy cheap. I told you that, are they ready to buy from $1940 area because of this major three resistance we have at the top? I don't know. I don't think so. So that might be reason why we're coming back into the major demand zone to buy to the upside again. So how do you trade your market? How do you trade your market? Remember, Elliott with 1, 2, 3 always break a major what structure. 4 recover, 4 must not break above 1. Are you getting it? Then 5 before we can now do that major ABC. So it depends on how you're looking at the market. Trust me, if you're looking at the market, we're bringing all the confluences in that the market use. Know about how your structure, know about how your market, what do you call it, the behavior of the assets you're trading moves. You will not make some kind of silly mistakes you are making, because 100 plus 200, 300, 500 pips minus 100, maybe you have 1,000 pips, you lose 100 pips out of it, or 200 pips, you still have 800 pips. You look for a quality trade that gives you under 1,000 pips again, you have 1,800 pips. You lose 400 pips out of 1,800 pips, you still have 1,400 pips. Compound under 1,000 pips again, you have 2,400 pips. You lose 400 pips, you still have 2,000 pips. If you have under 1,000 pips again, you have 3,000 pips. You lose 200 pips out of it, you still have 2,800 pips. That is the consistency in this market. There's nobody that will tell you that. If I tell you that I don't lose money, is a lie. I lose money in the market also. Everybody loses money, but nobody posts their losses. So don't let anybody deceive you that the consistency is that your wins are bigger than your losses. Are you getting it? Make sure you are taking good risk to reward trades. Like this trade we took, I should go back very well. Like this particular trade we took, where is that trade? $1932 area. Remember, what do? We took one trade from 1944. One short trade from, where's that trade? We took one trade from 1932. I guess our stop loss was at 1939. We took profit at 1910 on this particular trade, 910 or something like that. You can see the risk to reward, 4 to 8 risk to reward. They took on that one again from 1944. That was the last swing trade we had. Our stop loss was 1960. 1960, yes, if I could remember. No, it's 1960. I make sure that I above this particular low. 1960, yes, I think 1960. That was my stop loss. And I took profit at 1880. 1890 or something like that. 1890. Look at the risk to reward, 3 risk to reward. So even though this one is even large, this 3 risk to reward is larger, but because of a higher time frame, higher swing trade I took, it was a 600 pips. I didn't lose any money, and I still got another extra, what's it called, 1932 to 1910, about 220 pips sell. Are you getting it on that trade? If you can, I should go back to all those my videos again. This was the trade. This was August 8th, 220 pips. And aside from that 220 pips, we still had another 1944 to 1890, 520 pips trade. That's how to trade. I have not lost any of those trades. And I'm still telling you that because I'm following the structure itself, I am still in profit. This is how you look at the market. I don't care how long it takes me. I don't care. I don't look at my candles. All I look is my structure. My structure is what I look at. Are you getting it? And I put my wristwatch to it. Are you getting it? My message has been popping. I'm not supposed to do more than 10 minutes, but I've done above 10 minutes right now. So I need to get going right now. But I just said that it's important that I do this video and show you that if you're ever confused about what to do, this is what the market is doing already. And I can see us traveling back to, what's it called, 1880, breaking it, even going to $1860 area. Are you getting it? That's why they told you that the trend is your friend. So you are on a trade from 1932 and you're seeing 1916, oh, all my profits are lost already. The trend is your friend. The trend will reverse back to those areas. So if you want to leave your market, take your profit. Why do you want to take profit? If you are, maybe you're traveling before, you're away from your computer for some time, and you feel that you are in 188 area already, well, recovered about 250 pips to the upside. The trend is different. Don't worry, the trend will continue what going your way and give you even much profit. But when you don't know what you're doing, you now start wallowing in emotions and you start letting all the fundamentals news get into your head because you want to day trade or scalp every day. This is what I have for you. I won't say more than this. I will just tell you guys to continue my Telegram channel, support me. Are you getting it? Because it has not been easy. It has not been easy. It's not everything that man will talk. Are you getting it? But just let's help each other grow here on these what's it called, this trading journey, because this guy can accommodate even 1 million Nigerian guys. Even though we are 2 million, we can be making $1 million from this market. This is the highest market in the whole world is trading. Any business that can make you, I don't think there's any, there are businesses, but trading is one business. I know that if you know what you're doing, you put 1 to 2 or 3 years to it, 1 year for the normal training, 2 years for the experience, you attain all these things I've known today. It took me years to get to, study all these things I have today. And this is a lifetime you getting it knowledge I have in my head. So no matter what, the confidence I have is that no matter what happens, I getting it, I will always come here, and whether you like it or not, one lot, a $10,000 account with a one lot 20 pips every day is about 2,000. Is it $2,000? Somebody help me calculate. 20 pips is $200. That's enough in Nigerian economy today to take care of my daily needs and consistency. Cashing those 200 pips. I don't know. As in, I'm just talking. So the pips calculation itself. If you see that your account can accommodate 10 loss, take it. You can. The only way you can get rich in this business is using those large loss, but you need good capital. That's why the profits are there. We'll get there someday. We are still building. We are not as big as the other ones there, but this is not a competition. Like I told you, this particular market is a $5 trillion market. So if me and 1 million of my Nigerian friends or my Nigerians are taking even $1 million out of it, how much is that? That's just about $100 million out of probably a $5 trillion market. They don't care because market, that's every day. Market flows more than $5 trillion every day. So this is what I have for you. I've spoken more than the time, but this is needed. I will upload this on my YouTube channel, and I'll tell you if you don't understand anything, if I'm too fast. I believe that I'm talking to intermediate traders. I'm talking to beginners. That's why I just run free Telegram channels. I make money from the market. I don't need your money. Are you getting? But we're still building, and we'll get there someday. Take care and bye for now. Bye.